Hey, it's Monday Mortgage with James Hamby and Southern Classic Realtors, and today I've got Mr. Todd Everett with us with Guarantee Rate Mortgage.
Good morning, everyone. Happy Monday.
Yep, great day to get started. Great week. Let's talk about what took place last week on Wednesday and Thursday. The Feds, go figure, right, did raise the rates, short-term rates, another 3/4 point. So, unfortunately, what that's doing is it's going to raise interest rates yet again, and they're talking between now and the end of the year doing it probably another 1.25 points.
Yeah.
So the Fed government, and you would think that history would help them learn how to fix this issue with inflation, but as they continue to raise these short-term rates, it's going to affect the interest rates in our market today.
Absolutely, and it has already drastically affected them.
So what I'm going to recommend to all my agents is make sure you get with Todd or Justin or Ben or Brandy and have a conversation with them on alternative methods for interest rates. Meaning, what's a good loan package? Is the adjustable rate mortgage the answer? Is the 2-1 buy down the answer? You know, Justin and I talked about the 2-1 last week, but whatever we have to do, we've got to help buyers in this shifting market get the right product to help them.
Absolutely. And you know, the answer to the question you just asked is the answer is yes.
Mm-hmm.
It's just a matter of looking at each individual file, their credit scenario, their file period,
Mm-hmm.
and offering them all the rates, or not all the rates, but all the programs that's available to them, and letting them make that decision as to which one they want to go with.
Well, that to make the final decision. Remember, guys, it's about credit. It's about their debt to income ratio. It's about job stability, you know, how much money they can put down. If a person has a lower credit score in the low 700s and their debt to income ratio is 45%, their interest rate's not going to be that favorable.
Correct.
And just the opposite side, if you've got somebody that's got a really good credit score above 800 and their debt to income ratio is like 25%, and they've got 20-25% put down, they probably are going to get a much more favorable interest rate from a mortgage company.
Correct.
So, you know, we got to be, again, educating the consumer, educating our buyers on what this is looking like. So as this market shifts, we've got to shift with it. And I'm going to tell you right now, from my experience of going through this over years of being in this business for quite some time, when that starts to happen, and it's going to happen, what goes up comes down, and what goes down goes back up. You know, and all the good times when the rates a year ago were what, 3-4%.
Yeah.
Todd refinanced my house back in November of last year. Almost a year later, my 15-year note was 2.375 or something. Crazy. And here we are. You know, we're in the mid 7s today. 7.5% interest rate is where we're at. That's with, you know, not trying to buy down your rate or anything like that. So it could be very well, we could be in the 8s, maybe 9s. And if you go back to the 1970s, when this took place, it's the same thing that's taking place. And the interesting thing with that, Todd, is that when that interest rate exploded and went up, when it finally teetered off at the top, it took 10 years for it to come back down.
Right.
You know, so you might not be thinking, oh, well, this is just going to be something we're going to fix in the next few months. It might be with us for a while.
It may be.
But if also in 2 or 3 years it does happen to drop back down, the client always has the right to refinance.
That's correct.
Providing they've still got good credit and they're paying their bills on time, and you know, their debt to income ratio is still low. That's just another alternative for refinancing, just like Karen and I did last November.
Yeah.
We just got lucky and hit the market with the timing to be able to get such a great interest rate.
Paying attention to the market.
You know, what if we'd have said, well, we're just going to wait a little bit longer? We would not have. We would not have.
Not be where you are today, that's
right?
for sure.
So for those buyers out there says, well, I'm just going to wait. Listen, I said it a couple months ago. Todd and I were doing a video a couple months ago saying that we were heading to 7s. We're here. And if you didn't lock back then, you better lock now, right?
Correct.
Because if you don't lock now and we get to 8, you're just going to regret that 2 points between 6 and 8.
It's huge. I mean, it's that much more money they're coming to the table with.
Right? It loses you buying power. If you are now at 8%, you're not going to be able to buy as much house as you could at 6 or 4.
Correct.
And so therefore, think about that. the higher the interest rates get, the lower the buying power of what you can afford based upon your particular situation.
Absolutely.
So keep that in mind, folks. I don't see it going down this year, and I don't see it coming down in 2023. I think it's going to flatline. I think it's going to drive housing pricing down.
Yeah.
You know, your interest rates can't keep going up, and the housing prices going up too, because then people can't afford to keep spending higher when they don't have the means to do that.
Well, I mean, as you and your agents already know, we're starting to see prices come down some now.
Right. Days on the market are changing too.
Exactly.
You know, so you might also, if you're on the seller side and the listing side, you might have to get back to the basics of making sure you're doing open houses and things of that nature. Have these conversations with sellers and make them understand pricing is everything right now. You know, so
Absolutely. And once again, you'll start seeing more marketing for homes now that they're sitting longer. You don't have buyers beating the doors down to get in and writing the offers. Reach out to us, myself, Justin, Ben, Brandy. Would be more than willing and would love to help you out with any type of marketing material. If you want us to come out and sit with you during it, reach out to us, and I'm sure one of us can get there somehow, some way.
all right.
We're here for you.
Yeah, absolutely. Thank you for doing that.
Absolutely.
Listen, when you've got somebody like Guarantee Rate and these guys in your corner wanting to help you with your business, you need to take advantage of it. So I appreciate your time today.
Thank you very
It's
much.
been another great Monday Mortgage, and keep your heads up, stay positive, and just get back to the basics, because the basics are never outdated. Thanks again, guys. I appreciate you. Look forward to seeing you again next week. I hope you have a fantastic week, and if you need us, call us. You can always reach out to the gang at 706-389-0691. Feel free to email them, scr.grm@gmail.com. We appreciate Guarantee Rate. I appreciate my agents. And always, we appreciate all those people that put their trust in all of us to do real estate business every day. Take care, guys. Thanks again. We'll see you soon.
Have a great one.